Rolling.
All right, thanks so much. My name is Lisa Merrifield, and welcome to this University of Illinois Local Government Extension webinar. Today, we are going to be discussing the Illinois Climate Bank and the funding opportunities available to Illinois communities. This webinar is co-sponsored by Prairie Rivers Network and the Great Lakes Thriving Community Technical Assistance Center, which is funded by US EPA and DOE. So our speakers will present, and then we will take questions at the end of the presentations. So if you have questions, please put them in the chat, and we will share them with the speakers during the Q&A. And depending on the question, a speaker might pop on and answer in the chat as well. We are recording this webinar, and you will get a link to the recording and contact information for the speakers in the next few days. And you can always find us on the Local Government Education webinar on our YouTube channel. So I think those are all the logistics. So I will now turn it over to Amanda Pancaw. Amanda is the Director of Energy and Community Resilience at Prairie Rivers Network, and she provides leadership around the state to help communities realize the benefits of clean and renewable energy. Amanda, I will turn it over to you.
Thanks so much, Lisa. I'm going to walk through today's agenda with you and do a bit of a few slides as an introduction, and then I'll hand it over to Chris with the Illinois Climate Bank for the majority of our time today. So again, my name is Amanda Pancaw. I'm the Director of Energy and Community Resiliency at the environmental nonprofit Prairie Rivers Network. I am going to talk a little bit about climate and energy funding in general, why now is the time to have webinars and conversations like this about taking advantage of those opportunities. I'm going to talk a little bit about the Great Lakes Thriving Community Technical Assistance Center effort, which Extension and Prairie Rivers Network are a part of, and which is why we're having this webinar series. And I'll talk a little bit about what we covered in our first few webinars. Hopefully those will be of use to folks as well. Then we're going to dive in. Again, the majority of today, you're going to be hearing from Chris, who is the Executive Director of the Illinois Finance Authority. As you will hear from Chris, in 2021, our state energy and climate law, the Climate and Equitable Jobs Act, directed the Illinois Finance Authority to start the Illinois Climate Bank. And we're going to hear all about the exciting opportunities underway that are bringing opportunity to the state and to communities for climate and energy funding and financing. Then, as Lisa mentioned, we'll wrap up today with question and answer. We should have plenty of time. Feel free to drop those questions in the chat. We might answer them as we go, but we'll definitely be sure to cover them at the end. So you've heard Lisa and I both say Great Lakes Thriving Community Technical Assistance Center. It's quite a mouthful. So for short, we call this effort the Great Lakes TICTAC. It is one of 16 similar TICTACs across this country. We are in US EPA Region 5. This is one of two technical assistance centers in Great Lakes Region 5, so it serves Illinois. The mission of the Great Lakes TICTAC is to help community-based organizations and communities successfully apply for and receive federal funding for clean energy projects, cleaning up pollution of the past, and green workforce development. This Great Lakes TICTAC's primarily based out of University of Minnesota with other nonprofit and state extension office partners. And as I mentioned, University of Illinois Extension is kind of the Illinois arm of this. And Prairie Rivers Network is supporting Extension and their efforts with the Great Lakes TICTAC. We're going to take a quick, just very, very quick look about, I've mentioned that the purpose of the TICTAC is to bring this federal funding for climate and energy to underserved communities. The purpose of the Climate Bank is to bring funding and financing and public-private partnership opportunities for energy and climate. So why now? And one of the big reasons why now is we have unprecedented opportunity in the way of state and federal legislation for funding these energy and climate investments and pollution cleanup opportunities. So just very briefly, let's see, let me find my notes here. So federally, we had the passage of the Bipartisan Infrastructure Law and the Inflation Reduction Act. And there are opportunities in both of these laws for homeowners, for businesses, for communities, loans, grants, incentives, rebates, But some of this funding is flowing through state agencies that are then rolling it out for state projects and or rolling out in funding for people and communities. And then similarly, the Illinois Climate Bank is going after a lot of federal funding to implement projects and provide funding and financing in Illinois. This is all bolstered by Illinois state law. I already mentioned the Climate and Equitable Jobs Act that really has created a foundation in our state to be better able to take advantage of all these federal opportunities. So you're going to hear Chris talk a bit about, stacking opportunities for funding and financing these projects. And there's really never been as much opportunity as there is at this moment. So very exciting time. And just one of the ways that Extension and Prairie Rivers Network is kind of bringing the work of the Great Lakes TICTAC to Illinois is through this webinar series. And so we, in our first webinar, we really dove into what the Great Lakes TICTAC is, who it's going to serve. Basically, anyone that reaches out to the TICTAC is going to get a one-on-one consultation. The services of the TICTAC are really driven towards underserved, rural, and disadvantaged communities. So you might get greater levels of support depending on your project and depending on the community you're representing. So we really dive into that and give a quick overview also of some federal funding opportunities that the TICTAC is focused on in that first webinar. In webinar 2, we take a little bit closer of a look at community change grants, which are funding community-driven projects for climate resilience, clean energy, pollution cleanup. And then finally, in our webinar 3, we examined climate change's existing and expected impacts to Illinois. And we looked at funding opportunities for mitigating some of the hazards brought about by climate change and for building resilient communities. There's some funding and grants out there for water and community projects for resiliency. So that's kind of a update of what we've done so far. You are currently on webinar number 4, where we are highlighting the Illinois Climate Bank. You can watch past webinars. If you visit this QR code or this link, we'll certainly get the recording of today's webinar up there too. And then lastly, I'll just leave you that, again, that webinar number 1 really dives into the services of the Great Lakes TICTAC. If you hear about things on today's webinar and you're not sure where to start, the TICTAC is going to be a technical assistance hub for you to get started, to learn more about funding and financing clean energy projects, whether it's opportunities from the state, the feds, or the climate bank. So that's just a bit more about getting connected with the Great Lakes TICTAC. And with that, I'm going to hand it to Chris, who again is the Executive Director of the Illinois Finance Authority, which is now home to Illinois' Climate Bank. And I will stop sharing my screen so that Chris can share his.
Great. Thanks, Amanda. That was going to be my first question. Am I sharing or are you? I'm prepared to share. Does that work?
Oh, looks like Nancy's got your slides up, so we got you
that's
covered.
even better. Nancy, thank you. Hey, Amanda, thank you so much. Again, I apologize for the background. I'm speaking at a solar conference. So a few words first. Hey, Amanda or Nancy or Lisa, roughly, we have 74 people, and then roughly how many are from Illinois and how many are from the rest of the Midwest? Do we know that?
Yeah, I think most people joining us today are probably Illinois community leaders. If folks want to put in the chat where they're from, we often do that. It's fun to see. We often have a lot of downstate folks on our webinar. So if folks wanted to share, we've got Chicago coming in first, Peoria. So mostly Illinois people. While this is kind of our Illinois effort as part of the Great Lakes TICTAC. So I'd imagine maybe we have a few out-of-state folks, but primarily Illinois folks for sure.
Perfect. Okay, so thanks for the kind introduction. My name's Chris Meister. I'm the Executive Director of the Illinois Finance Authority. I've been in state government since 2003, and I've been with the Finance Authority first as General Counsel, but after 2009 as Executive Director since 2009. And then during that time too, I did a 6-year term on the U.S. EPA's Environmental Financial Advisory Board, which is sort of an extraordinary group of volunteers backed by an extraordinary agency, US EPA, and you can just Google EFAB. So much of my background for the Climate Bank came from my service on the US EPA's Environmental Financial Advisory Board, but also the Finance Authority had a long, long history going back to predecessor agencies in being involved with resilience, clean energy, et cetera, et cetera. But the landmark element, and again, the Climate and Equitable Jobs Act, for those of us who are here in Illinois, it is nation leading state legislation, and I'm going to tell you why. Those of us who are from Illinois or have been in state government for a while, like I have, are not used to the state of Illinois being a leader. But on the Climate Equitable and Jobs Act, that 900 pages that was led and enacted by Governor Pritzker and the Illinois General Assembly is really a nation-leading reworking of state energy law and policy in Illinois. Now, I'm not going to bore you with all 900 pages. I'm just going to highlight here is what my personal favorite paragraph is of the 900 pages. And it's paragraph 3 on this slide, accelerating the investment of private capital into clean energy projects in a manner that reflects the geographic, racial, ethnic, gender, and income diversity of Illinois. That is great language for me as a state public servant because it allows me to have the same conversation on the west side of Chicago on West Harrison Street as I do in Harrisburg, Illinois, and everybody tends to nod. So we have been able to boil down, at least from our perspective, that's by no means definitive. There are 5 elements to CEJA, 5 themes that it's great for everybody to keep in mind. And I can boil down these 5 themes as partnerships, quantifiable progress on climate, build it here in the USA on national security grounds, hopefully in Illinois, and Justice 40 benefits and involvement along with the participation and involvement of organized labor. Now, these are great themes for those of you that are in Illinois trying to figure, or those of us in Illinois who are trying to figure out, how do we access the largest river of federal money flowing towards a single purpose since the New Deal in the 30s? And I'm going to tell you, because in our experience, this is a 5-part equation. We're fortunate here in Illinois. It is already the law and policy of the state, but it is also the recipe for obtaining and complying with federal money. Next slide. So we're very proud of this slide because 12 months ago, the Finance Authority, and again, to date, we're a rare example of state and local government consolidation. Those of us in Illinois have probably heard countless times, well, Illinois's got more pieces of government than any place in the country other than Pennsylvania. And we were actually the example of a rare consolidation, 7 statutory entities made into one. We're not appropriated. We have a volunteer 15-member board. We meet in public once a month. We put large amounts of public information out on our website, in our meeting documents. Anybody can dial in or attend the second Tuesday of every month at 9 a.m. But we did not just start with that. And our board members, they're sophisticated but volunteer appointments by the governor, and they are confirmed with the advice of the state Senate. So we currently have 15 members, but we just didn't stop there with our bias towards public facing and engaging with stakeholders. Now, to date, many of you may not have heard of us because frankly, a lot of our activity has been focused on nonprofit health, nonprofit education, and then water infrastructure projects, which I'll go into in a little bit because it has direct relevance to our climate mission. So 12 months ago, the Finance Authority was at zero. Today, we're at approximately $340 million. Now, again, we only have $3 million in an actual IFA bank account, but we are under award documentation or in the process of receiving funds of federal funds totaling $340 million. And how we got there, could you go back to the 5-point slide, please, Nancy? How we got there was partnerships. CEJA, the State Climate and Equitable Jobs Act, became law in September of 21. There was a little bit of a lot of the initial work was actually done by the Illinois Commerce Commission. Some of you may know that as the Public Service Commission. So there was a lot of groundwork that was done. But starting in November of 22, the Finance Authority, as the Climate Bank, engaged in a vigorous online engagement with stakeholders that to date has been pretty successful. And frankly, many of the people on this call may have participated, but we've had somewhere between 12 and 20 of these. We expect to have more. We even had one this morning for one of these pots of money that I'm going to talk about. But again, I think that's what's unique about us is Chris Meister is the executive director. I'm merely the hired hand to 15 volunteer board members who meet in public under state transparency laws, and our leadership, Will Hobart, and the other selfless volunteers have really leaned into this public-facing approach. Go back to the next slide, Nancy, please. So the red boxes are funding for financing. The green are elements that we are looking at for grants. So starting from the top, the governor designated the Finance Authority as the Climate Bank as the lead applicant for Solar for All. That is, Solar for All is part of $27 billion that comes from the US EPA that is part of the Inflation Reduction Act. Much of that is going to be focused on Justice 40 communities and individuals. Here in the state of Illinois, there is an existing Solar for All also aimed at Justice 40 through the Illinois Power Agency. But in our application, we really leaned into partnerships within state government. We partnered with the Department of Commerce and Economic Opportunity, which under state CEJA is receiving many of the workforce dollars that are coming through CEJA, workforce business startups, but also the Power Agency that issues the renewable energy credits for things like community-driven community solar. And since a lot of this is housing and low income, we also partnered with the Housing Development Authority. So we like to think of that as a recipe for success. The federal government agreed with us. And outside of the larger states, this was the largest tier of awards that Illinois could have qualified for. Next, we have the second part of, and just getting back to GGRF Solar for All, that was announced on April the 22nd. We are currently in documentation and webinars, and we have a grant officer named Christine from the US EPA. We also had a stakeholder engagement within days, online engagement within days of the award. The next award was announced on April the 4th. This is the so-called capitalization for green banks. The General Assembly and the governor liked Climate Bank better than Green Bank. We like it too because I think it gives a larger space at the table for the large array and complexity of the issues that we're all going to be facing. They're really tied to climate, and it's better to frame it that way, or that was the view of the governor and the General Assembly, and we agree with them. So this part of the Greenhouse Gas Reduction Act, the NCIF, states or areas could not apply directly. They needed to be national applications. And we were part of the Coalition for Green Capital. That was convenient for us because the leader, Reed Hunt, of the Coalition for Green Capital also played a key role in persuading the U.S. Congress to put the $27 billion in the Inflation Reduction Act that became the Greenhouse Gas Reduction Fund. So that is capitalization. We expect over $100 million. Again, our parent grantee, the Coalition for Green Capital, is doing a lot of the heavy lifting of negotiation and documentation currently with US EPA. The hope for all of us is that there have been some public announcements from the US EPA that the money should start to flow in July and needs to be under the terms of the Inflation Reduction Act, the provisions on the Greenhouse Gas Reduction Act, that it needs to be fully obligated by the end of September 2024. Now, this has been a lengthy process. We are cautiously optimistic. Again, going back to my point that 12 months ago, we had 0 federal awards or dollars under management. Today, we have 340 awards that are in documentation, but we only have $3 million sitting in an IFA bank account being deployed for climate purposes. I'll get to that one. The next is a $14 million U.S. Department of Energy revolving loan fund. Again, keep that phrase, revolving loan fund, at the top of your mind. I'm going to get into that in a moment. This is for buildings. I received a email this morning from the State Energy Office that US DOE is actually going to be flowing those funds in the not too distant future. This has been a long wait. The next one is something that we're very excited about, but it has taken longer than we anticipated. The CFI, this is for electric vehicle charging infrastructure. It was a national competition. We, at the request of Governor Pritzker's office, we were the lead applicant. We put together a coalition of the willing. Again, think back to partnerships earlier in my presentation. And we had partnerships with park districts, with nonprofit colleges and universities, with community organizations, with municipal utilities, with some rural co-ops, and with, importantly, some key counties in our state. Cook County, Rock Island County, McLean County, Sangamon County, and Coles County. That's basically Springfield, Bloomington, Normal, the Quad Cities, and then Charleston, Mattoon, along with suburban Cook. I'll also note that we are in the process of developing a rather extraordinary partnership with the city of Chicago. We are very grateful to the mayor and Commissioner Angela Topher and her team in the newly reconstituted Department of Environment. And so this is with the U.S. Department of Transportation. I think we received the award in February. We are still in the process of documentation. The next $40 million is GRID, again, close partnership with the municipal utilities, of which there are many in this state, and the rural co-ops. And finally, the SSBCI, where this is U.S. Treasury money that allows us to participate or purchase a loan called a participation loan with private banks and private lenders. And while we've only received an allocation to date of $3 million, we expect it to go to 20. There are special provisions of what's known as SETI, which is U.S. Treasury speak for Justice 40. And again, it's not just Black and brown people in poor neighborhoods and urban areas. It's also rural folks, small town folks, anybody that, any individuals, companies, or communities that, that the global and national and state economy is left behind. Again, we're acting on that. Moving over to my left, the additional resources. Let's just sort of talk about this. So the Inflation Reduction Act has $394 billion, roughly. All this alphabet soup, all this grant, including the two other grants that I'm about to talk about, that's about 40 billion of it. 60% plus of the $394 billion are tax credits. And this is the way for all of you to think about tax credits, because frankly, and I'll give an illustration later, is for those of you involved, the 80 or so of you that are on this line that have been involved in local economic development, you've probably run across low-income housing tax credits for affordable housing, and new markets tax credits, and historical tax credits. And I think if there's anything, again, important, valuable federal financial assistance, but they're complicated and they take large numbers of pretty highly priced, sophisticated white-collar people to help you figure them out for your project. The Internal Revenue Service that is part of U.S. Treasury, the guidance for some of these is A, coming out, and B, some of it is only come out in March. But under the Inflation Reduction Act, under the Biden administration, this is going to be much simpler. But for those of you that are familiar, my guess is that you are, I learned during my time at the Department of Commerce and Economic Opportunity the iron rule of funding versus financing. And that iron rule is people will walk a mile barefoot over broken glass for the dream of a free grant dollar, but you tell them that you can save $100 in financing costs and they'll promptly fall asleep. For federal tax credits, you start talking about tax credits, and not only will you put them to sleep, but you will put them into a coma. Think Sleeping Beauty coma. So it's part of our job is to try and make that accessible and sensible. I've got an illustration, but this is the analogy to keep into mind. Federal tax credits are a magic spinning wheel, but rather than turning straw into gold, you are turning paperwork into equity. And for all of us involved in these issues, equity is funding. Funding is the equivalent of a grant. And once you have equity in funding and a revenue stream, often you can finance it. And our goal is to make financing tools available at attractive rates and at attractive interest rates, attractive conditions. And even yesterday, I was in Springfield working with House Leader Robin Gable and Senator Ventura from Joliet, and we had the support of the Municipal League, the Bankers Association, the Chicago Land Chamber of Commerce, and the Association of municipal utilities among and also organized labor. We've got a Senate bill, which we hope is going to be out of the legislature by Friday, called Senate Bill 3597, which is going to make it easier for local governments. And I'm going to tell you why, because again, the magic spinning wheel that takes straw and paperwork and turns it into equity is known as direct and elective pay. It's transferable. It is available to nonprofits and to local governments. And you would say, nonprofits and local governments, they typically don't have federal tax liability. Why should I care? And I can tell you why. Because those recipients, nonprofits and local governments, are going to be able to transfer them to willing buyers, and it's going to take the form of equity. A couple of the other things, a hallmark of the Illinois Climate and Equitable Jobs Act, and a hallmark of the way that J.B. Pritzker has run the state of Illinois, is this is a high priority. He has broken down silos. There is an unprecedented level of intergovernmental cooperation with the Department of Commerce, with IEPA, with DNR, with the Power Agency, with the Commerce Commission, with the Housing Development Authority, and with the IFA. I've been in state government since '03. This is very unusual, but it's also been very, very effective. So a couple of the other things that are coming down the pike, the IEPA's climate pollution reduction grant. IFA and many other stakeholders had input into that. Port funding, again, had input into that. I'm not sure if that one has been, there was a citing one that DCO, then the Commerce Commission had input. So, and there's always the economic development tie, because baked into CEJA is the governor's goal to make Illinois the best place in the country to build, own, and operate electric vehicles. We were with our partners at Department of Commerce. We were part of the Goshen plant that is working its way to being up and running in Manteno, Illinois. We've also been partners with the governor and DCO's effort on Rivian, on Stellantis. We've played a supporting role in the school bus company from Canada, Lion. And again, there is a seamless garment here between the vision that the governor has for this state, which is going to be a place that prioritizes both climate goals and equitable economic development goals. In short, a place where our kids and grandkids are going to have economic opportunities, be able to build jobs, careers, and families, and want to stay here decades into the future. Next slide. This is another element. And Amanda, great. Thanks for adding that into the chat, because again, if there's one thing more boring to ordinary people than municipal bond finance, it's tax credits, but it's important because it's a magic spinning wheel. There's our core business, conduit bonds, CPACE, State Revolving Fund. I'll talk about it. Our economic development loans, we played a role in Goshen. And importantly, for those of you downstate, one of the hallmarks of the Pritzker administration is not telling, but listening, and then finding the resources to lift communities up. And one of the places where we've been successful is Decatur and Macon County, Illinois. Decatur has got two Phase 2 applications, one for a U.S. Department of Commerce known as Tech Hubs, and then one is called Recompete, to help integrate the long-term unemployed into the private employment economy. IFA played a role in funding some of the expertise. Again, all the way to the left, that's about the direct pay, the elective pay, and building into some of the GGRF funding. We hope to have loan products to allow local governments and nonprofits to have bridge loans from us that will be secured by the credit to encourage the sorts of climate and inclusive projects that we all want as we move into this transition. Next slide. These are the three elements of our business plan, public finance implementation. Again, we're working very hard to avoid implementation and execution risk, but we've got extraordinary partners at the governor's office and in other state agencies, and as well as the extraordinary sophisticated volunteer members of our board and the Federal Funds for Future Jobs Act. Again, we're very proud of the communities of Decatur and Macon County, Illinois. We had a representative of the community college, a community leader, an African-American reverend, and the building trades all together talking about how these federal opportunities brought everybody together on a common goal. And our partners at Department of Commerce have been very, very successful in bringing private investment and private jobs to Decatur. Next slide. And the answer is yes. We'll put this on our website, and I will give this to Amanda and Lisa and Nancy to email this. Small Business Credit Initiative. This is U.S. Department of Treasury. Importantly for everybody on this phone, it's actionable now. It's the $3 million that we actually have in a bank account. Within the next day or two, we are having an experienced senior private commercial lender joining us from a large name brand bank. We've already got a person online, and the way that this works, again, for Climate Bank, for SETI borrowers in communities, which are the same sort of as Justice 40, we basically buy a commercial loan for Climate Bank purposes at a lower rate and a lower cost for the bank. The benefit is a lower interest rate for the borrower. The benefit for the private lender is taking their risk. Next slide. Because we do not receive state appropriations, we interact with the private markets and private lenders in a customer-focused manner. We are working very hard to innovate. This is one of our success stories. I would encourage everybody to visit our website, il-fa.com, and go to the CPACE website. Commercial property assessed financing is probably something that many of you in this space have heard about. The state has a nation-leading statute. We have nation-leading documents, and we have an ordinance. This is a local, county, and municipal aimed program where we develop the expertise and take on the back office work. This is a no subsidy commercial. Again, it's got to be fairly sizable because it's private money, but basically it's a no subsidy way of financing climate improvements and retrofit, both energy and water related. Again, I would just encourage people on this call, if you're interested, we have a standard ordinance. If you've got a community, I would say go to your community leaders and say, just adopt the ordinance as it is. Just fill in the name of your county or your municipality. Don't change a comma or a semicolon, because the goal of this is to make sure that a hamburger CPACE project, just like McDonald's, tastes the same in Harrisburg, Illinois, as it does on the west side of Chicago. Again, it's a way to attract private capital for climate purposes. And again, we're very proud of it, but we're going to need a lot of help bringing it to scale. There are 1,200 municipalities in this state and 102 counties, but we're making progress. Next slide. This is, you've heard about tax credits, but this is my attempt to, and the line in the middle is the difference between funding or equity and the difference between debt. And this shows the interaction between the state's climate objectives and equitable economic development and jobs objectives. We are, through the U.S. Department of Energy Loan Programs Office, known as a state energy financial institution. Again, the sorts of projects that they want to fund under that are north of $100 million, and it takes probably $1 to $3 million in white collar work to fill out one of those applications. But everybody on this call should take some comfort that the innovative visionary leader of the US DOE Loan Programs Office moved to Illinois when he was 1 year old, went to the U of I, and grew up in one of the tougher downstate deindustrialized communities. His name is Jigger Shaw. This nation is lucky to have him, and we're trying to figure this out. The 48 Cs, for those of you that are on this call from downstate, carbon or coal communities under 48C, there's going to be a 30-day opening, and we're trying to figure out sort of like our future funds, our federal funds for future jobs. We're partnering with the U.S. Department of Energy, or I'm sorry, with the U.S. Department, the State Department of Commerce, to make sure that companies in Illinois take advantage of it. The Illinois REV Act is Governor Pritzker's initiative to bring electric vehicle manufacturing and infrastructure to this state. And for all of you, for those who want more information, there are a bunch of links there in the bottom corner. Again, Amanda, Lisa, Nancy, you'll have this. It will be on our website for further review. Next slide. Okay, so Amanda, how much time do I have?
I'd say another 4 or 5 minutes.
Perfect. I'll go quick. I talked about the state revolving fund. It's probably the most successful federal, state, and local government plus private capital markets, climate finance structure that exists on planet Earth today. It's extraordinary. It is run by the US EPA and in Illinois, our state EPA. And I will tell you that I have been involved between 13 and 20 in issuing over $2 billion worth of AAA rated Illinois state revolving fund debt. The last two were green designated bonds. And what this does is that for sewer and water projects, it allows a reliable source of low interest loans to communities across this state. We're going to take that model and we're going to apply it to climate and clean energy. This is how we're going to do it. Next slide. These are our partners nationally through the Greenhouse Gas Reduction Fund, that north of 100 millions. That's going to capitalize the IFA as the climate bank. Then it's going to come through the National Clean Investment Fund competition. Our closest partners on this national effort have been the California iBank, the Missouri Water Bond Authority, the Ohio Air Authority, and Rhode Island Infrastructure Bank. These are organizations like ours governed by boards that understand the capital markets. Next slide. This is our timeline. We're not part of the state budget. I go to I go to our board in June to adopt a budget to give you orders of magnitude. Typically, the Finance Authority has operated on a $5 million annual budget. 40% of that comes from bond closings. 60% of that comes from investments on retained earnings, of about which we have approximately $60 million. But that year one of that 340 million, we are, it appears that the rough cut is going to be hopefully between 14 and $15 million. So that's a big ramp up. In public finance world, you'd say that's a hockey stick projection, but we've had some experience in these areas. I'll take any questions.
All right, thanks so much, Chris. We do have a couple questions in the chat. The first one is there a program listing that IFA will be sharing with DCEO Red Team members to share with local EDAs?
Oh, wait. We work very closely with the Red Team. We actually briefed the Red Team about 14 months ago on some of these credits, but for the reasons why I described, is just the words tax credits tend to put people into a coma. But yeah, we are. If you can go back to the triangle slide real quickly, I am working closely with top leadership at DCO and with the governor's DC team to make sure that we can translate some of these federal credits into language that will be understandable, and then route those deeper, more detailed resources. So we are actively working on that. It is challenging, but stay tuned. And Amanda and Lisa and Nancy know where to find me. And we look forward to getting this information out because the order of the day from the governor is get more than our fair share for Illinois. And at 65% of the Inflation Reduction Act, we need to understand these credits. And for the people that will qualify for these credits, we need to make sure they know the path. For local governments, though, I will tell you, I was in Springfield testifying before the House on Senate Bill 3597 that is making every type of local government as defined under the Illinois Local Government Debt Reform Act, having a purpose for debt to borrow money from the IFA is the climate bank. We simplified it for municipalities last year, thanks to State House Leader Kelly Burke. We are now working with State House Leader Robin Gable. So Senate Bill 3597, particularly call your House Republican members. They don't seem quite convinced. But that bill is going to move, and if you're a local government, you're going to have an extra tool in your toolkit. Next question.
Excellent. Thanks so much. Regarding direct pay, are entities able to use the monies to pay back a loan? This person's heard mixed results.
You know what?
Or mixed advice.
First of all, the Finance Authority does not offer legal or accounting advice. I don't know yet. Questions like this are very practical and obvious, and what we are working very hard to do is come up with a way to get these questions and issues surfaced, and have reliable folks that think about federal tax credits all day long, every day. So that's still a work in progress. But again, if you get discouraged, 12 months ago, I had 0 federal dollars under award and was deeply worried about our business plan for the future. Today, I am not deeply worried, and we have $340 million worth of awards. Under this governor and under this president, we are moving very quickly, and we're lucky in Illinois because the governor has put in place some top flight talent, not just at the director level, but all the way through. And I've had the privilege of being in meetings and Zoom calls with many, many, many of them. And they're focused on figuring out the alphabet and number soup, and then making sure that the people that are going to benefit actually do.
Excellent. Thank you very much. Amanda, do you want to unmute and ask your question about grid resilience grants?
Yeah. I was hoping if you could share a little bit more about the grid resilience grants. I know that the pre-application is open right now, and the funds can be used for a variety of investments, including microgrids, weatherization, community resilience centers. I did notice that the eligible applicants are small utilities, and you mentioned in your presentation specifically municipal utilities, rural electric cooperatives. It looked like maybe local units of government, municipalities might be eligible for this funding in the future.
Well, here,
In
yeah, so many of these municipal utilities, they are branches of their local municipality, okay? And there is an umbrella organization that we've been working with. There's about 70 of them in the state. We actually had a webinar that I know we're going to be being posted this morning. So that's 40 million. The other one of interest to this audience is GRIP, which is very competitive. Despite being encouraged last year, we were not successful, although those awards are going to be multi-years and going to have multiple applications. But the webinar that was being presented by my colleagues this morning, I think is going to be posted on our website soon. And there'll be more communication coming out. And Amanda, if you have more questions, I can put you together with the people that are deeply knowledgeable about the grid.
Thanks so much, Chris.
Excellent. Thank you. Your next question is, will the state revolving fund offer principal forgiveness for disadvantaged or eligible communities similar to the IEPA water state revolving fund?
Hey, great question. Let's just be clear. I deal with finance. Finance is a loan. It's like your mortgage. It's like your car payment. It's like your credit card. It's got to be paid back. If you want to have a reliable source of capital to be loaned to you and yours in the future, think about finance that way. I personally understand the need for principal forgiveness, but think of it this way. If you're running a state revolving fund and you're engaging in principal forgiveness, what you are doing is you are eating your seed corn for the future. You will have fewer crops in the future to eat if you have less seed corn. So my view, and again, I run a finance agency. I worked for DCO. I ran the grant unit. I know what that looks like. And for the first time in many, many years, the IFA is going to be distributing grants through some of those federal programs that I talked about. But, you know, there's got to be a balance. But I will just tell you, as somebody who's dealt for many years with state auditors and have got many years in my future dealing with both state and federal auditors, if you want a grant, make it a grant. Don't make it a, don't call it a loan and then pretend it's a grant, because the auditors and the accountants are going to get very agitated about that. Those views are my own. They are personal. and they are not the official position of the state of Illinois, the finance authority, or the federal government. But I will tell you, there's a lot of grants. Go and get the grants. There may be an opportunity for loan forgiveness, but the first goal, can you go back to the state revolving fund slide? The one after the triangles. Our first order of business is to try and make this work so that in 15 years, whoever is sitting in the seats of the people in this call will have a reliable, low interest financing structure available to them to finance and purchase and implement whatever is the state of the art or commercial standard climate technologies that are available in 15 years. In 15 years, the credits will be gone. The grants will be gone. And I know this because I was working for the state of Illinois in 09 and 10 during the stimulus money. My job is to figure out how this will be a reliable asset for low interest, equitable climate financing available to the people sitting in the chairs of everybody on this call in 5, in 10, and 15 years. Those views are my own.
Thank you so much. One more question. How will this federal tax credit program impact local TIF funding? Will it be a standalone program or will it strengthen the local TIFs?
Probably will be something complementary, but separate.
Okay.
Again, great question. Hadn't thought that deeply. I'm still trying to figure out ways to talk about direct pay without putting people into a Snow White coma. But I will tell you, I'm not alone because I got a top flight law firm to talk to the DCO Red team about 14 months ago. And, you know, again, by a quarter of the way through that Zoom presentation, they were asleep. But I'm not alone on that because Mayor Johnson had top people from the U.S. Department of Treasury on Earth Day come to a historic church on the south side of Chicago and try and get people excited about it. And despite the mayor's charisma and the expertise of the U.S. Treasury folks, I think many of the people in that church on Earth Day would have rather been out planting saplings. So that's going to be a challenge for all of us, but keep in mind my analogy. Tax credits are important because it's a magic spinning wheel turning paperwork and straw into gold. Gold is equity. Gold is the same as a grant fund.
Excellent. Thank you very much. And yeah, thank you so much for being here with us for today. Thank you for sharing all your knowledge and information. Thank you, Amanda, for putting this all together. Very appreciative. And for those of you who are interested, we are working on doing a state revolving loan webinar related to the water programs through Illinois EPA in the next coming months. So look for that. All right. Amanda, any final?
Thank you. Happy to be here.
Yeah, thank you, Chris. Thank you, Lisa, and to all the attendees. Everybody have a great week.
Bye.